So Veena, we're in agreement that if someone's not earning a minimum of $300,000 a year in active income, they shouldn't spend any time on their investments.
I definitely agree with that. I mean, the most valuable resource, a lot of people, and especially if you ask people that are lower socioeconomic status, they'll tell you it's money. And it really isn't. I don't care about money the way I care about my time. Money is, I see it purely as a tool to get the thing I want more of, which is time. So if I can buy my time back, that's what the money is good for. Other than that, it's just a tool.
Yeah, which I think is awesome. And this is coming from someone, if you don't know Veena Jetti, she's a rock star in the multifamily space. She's a large multifamily operator with 25 to 3,000 doors, done billions of dollars of, transactions. And it's interesting, Veena, because when I tell people that the majority of the money that I've invested is with professionals like yourself, and I take an LP position versus a general, a GP position, they usually look at me like, why would you ever do that?
Oh my gosh, why wouldn't you?
Yeah, so tell them. So me and you have the same response, which is like, why would I ever not do that? So why do you think that way?
Well, one, because I don't want to be a jack of all trades, master of none. And I know how much work and energy and effort goes into me being a master of multifamily and like knowing this one space so entirely well that I have more insight than anybody in this space does because I spend so much time just focusing on these insights. I also know that there are other asset classes which are really great opportunities, like self-storage. I love self-storage, especially in a recessionary market. Am I going to go out and learn all the things it's taken me over a decade to learn to be where I am today in the self-storage space? No. Am I ever going to be as good at it as somebody who's been doing it for a decade? Also no. So instead of me trying to go out, spend the time, the energy, the money, the resources to learn the things that I need to learn, including the mistakes that I'm inevitably going to make, I'd rather just go to Susie Smith, who's already figured out, and be like, Susie, here's my check, take my $1 million and go put it into something wherever you put your money or whatever it looks like. And I'm being a little bit flippant. I don't think you should make investment decisions that callously, but the principle of it is still the same, right? So in my portfolio, like our trust, we have self-storage, I have retail, I have industrial, I have warehouse, I have restaurant, we're buying a bank. Like all of these things are things that I know they're good opportunities, but I can't actively manage. I'm just one person. I can only do one thing as great as I want to do it. And so that's where think of it like a partnership, right? Like having great partners who are literally experts in what they do. And, you and I have talked about this before too, right? Like if I'm going to sell my house, yeah, I can go sell it. They have like the for sale by owner sites. But if you look at the statistics, it's very clear that people who sell their own homes do significantly worse than if they call a broker. And it's like, I think of this mentality as like a really American mentality of being penny wise and pound foolish. And I think that's also why the majority of Americans don't have $500 for an emergency expense.
I agree. And I think they grow up hearing things, 65%, which is what you're referring to. I think the statistic is 65% of Americans live paycheck to paycheck. They couldn't come up with $5,000 in an emergency. And they hear things like money doesn't grow on trees.
Yeah.
Eat all the food on your plate.
Yep. All of these things. It's like a fixed mindset.
A penny saved is a penny. And you know what my response is? I'm like, no, it's a penny. That's what it is.
Yeah. No, I agree.
And then I think they hear things which say, like, if you want something done, you have to do it yourself.
That is such a bad idea.
Yeah. So, and you said something there, which I really believe to be true, is this idea of operational partners. So what I became aware of is, because you came from a corporate background as well, we were talking about that. And we were jokingly saying, like, when I was younger, I was like, oh yeah, like, people should get taxed more. And then you start stroking these big checks. You're like, wait a minute, time out. Like, where is this going? Like that was a large amount of money, right? So, and that what got you into, this space because of the tax benefits. And what I'm aware of is the most valuable thing to me to build wealth is not my assets, it's my income. And for me to stay focused on active income and increasing my specialized knowledge and my skill set so I can earn more money. And then I have operational partners like yourself where I'm like, hey, what's going on with that deal? You're like, hey, here it is. We distribute monthly. Here's the distributions. I'm like, cool. I wire you the money and I'm out. I don't talk about anybody with the rent. When toilets go back, like I'm not nothing. We're only talking 3 times. There's a distribution. You're about to sell the property or something else is going on that you need to talk to me about for 10 minutes, right?
Yeah. And then you're emailing me a K1, hopefully at some point. That's all I want. I want the negative K1. I don't actually care that much about the distribution, to be completely frank. For me, it's like the tax efficiency and then what's the overall IRR at exit. That's what I care about.
Right. Because I think that building wealth requires 3 things. The first is earning money, which the vast majority of people truthfully aren't great at. The second is keeping it, which also less people know how to do that. And the third is multiplying.
Yes.
And the multiplying thing, even less know how to do that. So talk to a little bit, like when you said IRR, for people who may not know what that is, it's internal rate of return. So if let's say you're shooting for, because I know typically, and I don't want to speak, out of place, but like typically it's somewhere around like a 15 to 18% internal rate of return, including the distribution.
Oh, I don't know about that anymore.
No? Okay. So tell me.
Okay. I think you can get like a 15 to 18% IRR on like a 5-year hold on Class C assets, maybe. And we're being generous. And this is a market shift, right? Like 3 years ago, 5 years ago on Class B value add, I could hit 18%. I hit 20%. I hit 22% all day long. Now the market has shifted and adjusted. Debt rates have changed. So now we're seeing more like 12 to 15% IRR. And that's being conservative. We exited a deal in 2022 where we had like a 48% IRR. And for anyone who doesn't know what IRR actually means, and a lot of investors like to focus on this without really understanding it, it's basically a metric of what the return of your capital is, but it takes into account the time value of money. So what that means is if you give me $100,000 and I give you back $150,000, your IRR will be higher if I give you back $150,000 in 2 years versus 4 years, because it's the opportunity cost of the money, right? If you have it in 2 years, then you can go and you can reinvest that while this other person's still getting the same equity multiple or same return, but it's taking a longer time. So that's what an IRR calculation is for. It's really used when you have a lot of opportunity costs that you're trying to evaluate.
Got it. So, and that's the multiplication part, right? So even though there's like an opportunity cost for the capital, the goal is you want the money multiplying. And I have a mastermind group that I run, and I'm curious about your thoughts on this and why it's so important to be constantly and perpetually pushing assets or pushing money into assets that appreciate and give you a little drip. Just a little drip, not like a huge, but a little drip. And the example that I gave is like back in the day when, let's say, the Roman emperor, when money was like hard, when it was like gold coins and maybe like some silver coins, bronze coins, right? Well, let's say the emperor wanted to pay for a war, but he didn't have the money. So he has 2 choices. One is to raise taxes. And how does that usually go?
Yeah, not great.
And back then, the mob might like kill you, right? The other choice, which is, the stakes were high. The other choice was, and what he chose to do, is he would actually clip the coins. So if it was like a 5-gram gold piece, what he would do is he would clip a gram off. So what he's doing is he's stealing from the purchasing power of the citizenry in order to pay for stuff that he doesn't have money for. Well, what I was explaining to this mastermind group, because these are high income earners and they have a tendency to hoard cash. And I was like, what's happening is when we print money, we are clipping coins.
Yep. We're devaluing it.
Your purchasing power, they are stealing from the purchasing power of the citizenry to pay for things that they don't have money for. And that is why when me and you now go out to a restaurant, it's like $150. That's why. Because the purchasing power has been eroded because we've printed a substantial amount of money. So I asked them a question. I said, hey, what is the only way you can deal with that? And they were quiet. And I'm like, well, the only way you can deal with that is to aggressively push money into assets that appreciate in value and give you a little drip along the way. That's the only way.
Yep. 100%. And I think this is the problem, right? Like our schools, we don't teach about money. So a lot of people don't actually know how money works. They don't know like basic tax concepts that the wealthy have mastered, right? Like people that earn a lot of money, like I have a tax strategist. I don't have to know any of this stuff because I pay someone a lot of money to know it. And I pay him to constantly be reevaluating what we're doing, what we're investing into, where we need to reallocate money, how to take title to certain things, right? Like when I'm buying a car for the business, I send him a text. I'm like, hey, I'm about to spend $100,000 on a car. How do I buy this? Should I leverage the interest rates right now? I know it's expensive, but it might generate an expense that makes it worth it for us to create a new note, right? Like maybe we want to conserve cash so we can put it into something else so we can offset some other time. So I have someone who's globally looking at our picture constantly. And I don't know who you work with. We work with Larry West out of Frisco, and he's incredible. I'm sure he's tired of me sending him random texts like, hey, I'm buying a car today. What do I do?
I know. It's funny because I didn't realize, and to your point, what I learned is that building wealth is a team sport.
Oh, 100%.
And what I learned is that accountants' business model is actually not set up to give you advice. They are document preparation people. Their model is that they like acquire a client, they get a junior associate to fill out the documentation, and they make the spread. They have no vested interest in giving you actual guidance. So I need someone, like you have someone, which we hired last year, who the way that I describe it is like the bookkeeper's like the running back, the CPA is like the wide receiver, and this person, for me, it's a guy named Justin. He's the quarterback. So what he's doing is reviewing all of your assets and saying, okay, you're going to make approximately this year. Here are the different investments we have at our disposal. Here are the different things that we can do to not only maximize how much of your income that you keep and like decrease exposure from a tax perspective, and also simultaneously like create wealth at the same time.
100%. But that is the hack, right? Like that is the key, is knowing and understanding how money works, or at least knowing that you need the team that knows and understands how money works and how depreciation works.
I don't know if you're like me, because you're a very smart person. And like, sometimes he'll say stuff to me and I'm like, I understood maybe like 70% of what you just said to me.
Yeah. That's like most things when it comes to like the tax code. I'm like, so is this legal? He's like, yeah, of course. I'm like, okay, sounds good to me.
Yeah, let's do it. But like, and it's interesting because I just have to like let it flow by me, and I might grab like the gist, but I'm like, okay, I think I understand what we're doing here. Oh, so what he did, which was mind blowing to me, he said, if you took $1 and you let it double for 30 days, you end up with like $6 million, right? But then he said, if you tax that dollar every time it doubles by 20%, you end up with $64,000. So here's what he said, Veena, which was, really interesting. This was in a room. We just did a gala recently, and he flew in and talked to everybody. And he said, what is your guys' answer to this problem? You know what everybody said back?
What?
Make more money.
No.
And he was like, no, what if I told you making more money is not the answer? And that in of itself is like a complete mind shift. What I feel like it's like, if you've ever seen like The Matrix, it's like Morpheus being like, this is not what you think it is.
Yeah. No, but you know what? It reminds me of just yesterday, I had an interaction, and it is with someone who really, really, really wants to be an entrepreneur. And he just can't quite unlock the next level. And the problem is the way that he's thinking about money is so completely off base, but I'm empathetic to it, because where was he going to learn this? He didn't grow up in a family that had knowledgeable parents. He hasn't been around even peers now that are knowledgeable. And so what he said to me is, he said, I have a certain sum of money. Let's say it's $50,000, right? He says, I have $50,000. And I'm like, wow, that's really impressive for you to have saved that up. Like, that's a lot of money to have saved up and to have. And I said, what are you doing with that money? He goes, oh, it's in my bank account. I'm waiting to see what I'm going to invest it in. And I'm like, how long has it been in your bank account? He said, for about 2.5 years.
Yes. Wow.
And I go, so you have it just in like a checking account? Is it in a high yield savings? And he's like, no. And I'm like, what are you doing? The last 2.5 years have been like 5% in money market CDs and high yield savings. You can get like 4 or 5%. He's like, yeah, but you know what I don't like is these big banks like Chase and Bank of America, they'll only give you that high rate up to $1 million. And then over that, they won't pay you that. And I go, you have $50,000. That is less than $1 million. Who cares what they do to people over $1 million? That's not your current problem right now. He goes, oh yeah, I guess that's true. And I'm like, go do this. Go start an investment account. Do something with that money. Because right now you're losing money. The inflation is completely decimating what the buying value of that $50,000 is. So then he said this to me, and I thought this was so interesting. He goes, I'm afraid if I put that money into a high yield savings account and earn 5% a year, I'm afraid because I have to start over. And I go, what does that mean? And he goes, if I invest it, I won't want to touch it and I won't want to spend it. And that means I have to start over and it'll take me a very long time to save up another 50 grand. And I was like, wow, this is such a such a different way of thinking. I shouldn't say abnormal because I think we think abnormally.
Here's what I know to be true is that he will watch lots of podcasts. He'll listen to you speak. He'll think that it's something like a technique where his thinking is what keeping him stuck.
Yes. It's 100% his mindset. It's all mindset.
All mindset. And what I wrote down is that like people think that they can avoid risk. You cannot. Yes. So what people think is that holding money in cash, there's no risk in it. And they think that they're avoiding the risk of investing it, when in fact, you're actually choosing the risk of currency, which every currency that has ever been around since the start of time has gone down to zero. Every single one. So you're actually doing something that's more risky than investing. I'll give you an example. So I went to a bank one time. I was doing a syndication and I was wiring a meaningful amount of money. And the person behind and it's interesting to me too that I have to go to the bank to wire the money. Like it's my money. Like why is it still this way? But anyway, so what she said to me, which was so interesting, she's like, hey, you have to be careful with these like multifamily syndications. And I thought to myself, I actually said this to her out loud. I'm like, this is so interesting to me, Mrs. Banker. She's like, what do you mean? I said, if I came in here to buy like $1 million house and put 25% down, you would have champagne and balloons. But because I'm wiring the same amount of money to put into a multifamily asset that is one of the safest places on planet to put money, you're telling me to be careful.
Because they don't understand it.
That's unbelievable to me. Like it's completely counter to the way that it actually is.
People do not. So human psychology is just like wildly bad at assessing risk. That's just the way it is, right? And we know that humans will go further out of their way to avoid losing $1 than they would to make $1. So all of this is like very basic psychology of money, which is a great book, by the way, The Psychology of Money. But what I realized in this interaction too is like, we are the abnormal ones. Most Americans don't know the information that we know. And the problem is when they hear us say it, because you and I both share all this information pretty freely. Like we don't gatekeep any of this. The problem is people think that, oh, Veena Jetti is just special. And I'm not special. I really am not. Like I wish I was. My mom thinks I am. My kids think I hung the moon because they're still little. So, we haven't gotten into the teenage rage yet, but I'm not special. I'm just willing to do things that other humans are not willing to do. I'm willing to outwork everybody that I'm around and do uncomfortable things. And those are the two big things that I think most people are not willing to do or won't do. And that's fine with me because like, I need people like that to keep my businesses running. But if someone truly wants to be successful, the cheat code is finding the person that's done the thing you want to do and then figure out how to be around them and add value to them and just sponge everything from them. And so, I'm like saying this to this person. I'm like, well, no, you need to put it at a minimum in a high yield savings account because you're losing money. And he's looking at me like I have two heads. And I'm like, I'm not one to give financial advice, but like a high yield savings account is like a pretty low risk. You could put it in a T-bill. You could put it in something that's like minimal to no risk. And I'm explaining to him, you've lost out on a minimum of $6,000 just because I did straight calculation without any compound interest, right? Over the last 2.5 years that you've owned or had this money. And I was like, I said exactly what you had said. I said, I think of every dollar I have as an employee of mine that I can work 24 hours a day without paying it overtime. So each dollar's job for me is to go out and make me more money. And I leverage that. And so I think of, so we never spend earned income ever. Like that's just a rule. And we're at a point now too, where we don't have to. There was definitely many times where we had to, but now we're at a point where we don't have to. So now what we do is all the earned income we have goes straight into investments. And then anything that those investments throw off passively, that's where we buy the fancy things and the things that we don't need, the things we want, right? So like, if I want to go to Paris and go on a shopping spree, I'm not going out working, earning that money and then spending like 10 grand there. I'm taking the 10 grand, I'm investing it, and then I'm taking whatever cash flow that throws off. You do it enough times and you have enough to do everything you want to do, but that's how you truly build wealth.
Yeah, I agree 100%. And I wrote down, like, when you were saying that about like uniqueness, as you know, like I have a coaching company with like 100 coaching clients, and I can see, and I know you can understand what I'm about to say to you. And I don't mean this egotistically in any way, but when people come up to me at events or I pull them into live streams, like I can see it in their eyes that they think that I have something that they don't. And what I tell them all the time is like, you know, everything I've done is truthfully not unique. So selling all like 2,000 homes in my career, that's not really unique. Like, you know, building a coaching company, that's not unique. Attracting 264 agents in 19 months, it's really not unique. What's unique is execution. That's what's unique.
But tell me if you think differently, but like, you're not special. You just are a person that was willing to work really hard and fail.
Yeah. And iterate and fail in public.
Mm-hmm.
Novello talks about that. Like if you are willing to fail in public, it allows you to build like lots of credibility over time. And it's just that, you know, people are like really afraid of that. I was aware that I was at there's a bunch of agents in a room and somebody wanted the mic. They asked me a question and I didn't know what he was going to say. And when he stood up, he was like, hey, I first met you online and I just want you to know that I thought you were annoying. And your voice bothered me. And it was interesting because a couple things like popped into my head immediately. The first one was like, if I wouldn't take advice from you, I'm not going to take criticism from you. Like it doesn't really affect me personally in any way. The second is though, Veena, I noticed that people in the room, there was like this kind of uncomfortable laughter. And what I'm instantly aware of, like instantaneously aware of, is that everybody in this room is afraid to death of getting that type of feedback. That's why they never do anything.
Look, myself included, I think being out in like the public space is very nerve-wracking. I feel very vulnerable a lot of times. I find myself overthinking a lot of like social media postings. I'm like, oh my gosh, why would I say that? Or is my hair done right? Or my makeup, you know, like there's all these things and like self-doubt. But what I found is now that I've done it enough, like I've had the meanest comments made to me. If you've ever had like a social media post go viral, like you will feel this in your bones, right? I had one post and it's probably gotten about 8 million views now. And it's like short clip. It's pulled from a much longer clip, right? But where I'm talking about the Starbucks test, where on our multifamily assets, we look to see how close the nearest Starbucks is, because theoretically, if you can afford like a $6 or $7 cup of coffee, then you can afford my rent. And that's the type of asset we buy. Not everyone buys these assets. Some people buy Class C, Class D, whatever, and that's fine. But I remember on that post, I had so many people trying to like discount what I have done and what I have accomplished. And at first I was like, oh, you know, like my imposter syndrome was like raging. I was like, they're right. Why am I saying any of this? Like, I don't know what I'm talking about. And I remember like saying this to a group of friends, and they were like, at that time, I think I had bought and sold over like $700 million. I don't know, 800 million, whatever. And they're like, you have bought and sold almost $1 billion of real estate in your own portfolio. What do you mean that this stranger on the internet is making you doubt what you've done? And I was like, oh, yeah, I guess that's also true. So, but then what I realized was there were so many more positive comments and so many more people that were like, wow, this is really great, useful information. Like, thank you for sharing this. And I was like, okay, so in my mind now, I'm like, I'm not talking to the person that thinks I'm like, you know, they would say like things like, they'd be like, oh, she bought and sold one house and thinks she's some kind of an expert. And I'm like, it's free to Google. You can Google me. Like, you can see what I've done. This is not hard, but you chose not to, and that's okay. But it's not those people that I'm speaking to. It's the people that are like, oh, I'm just getting started. I never would have thought about that. Oh, we're implementing this now into our due diligence process. Thank you for sharing this. Like, those are the people you're speaking to. And it's so much more important that you reach that one person than the person who's going to just, because they know you're good. They know they can't stop you. Otherwise, they wouldn't post on your stuff. What they're trying to do is distract you. And they will do a good job of that, especially when you first start out.
Yeah. And what they're actually doing, unbeknownst to them, is that they're actually so I think that when you authentically show up as yourself, which for a lot of people is a challenge, when you do that, you tell people what you believe instead of what you do. That's a key distinction, because I think a lot of people tell people what they do and nobody really cares. But if you tell them what you believe, that becomes polarizing, because it'll pull people toward you that have similar beliefs, and it'll push people away that don't. So what you're actually doing is you're scouring like the 7 billion people on the planet to find the tribe that likes Veena and the way she does it. Now, what those negative comments are actually doing is they increase the algorithm to continue to push it out more, to find more people that believe the way you believe. So like, it's interesting in the sense that, you know, that what I just said about like, if I wouldn't take advice from you, why would I take criticism from you? I'm also aware that in the United States, even though it seems like it's more, you know this, which is very interesting, is that banks, their definition of accredited investors to have $1 million in invested assets separate from the equity in your own home. That should tell you something, team. They don't even view it as an asset. Like, I need you to understand what I just said to you. This is coming from an agent, okay? So 2,000 homes. In their mind, they don't even view it as an asset. They'll sell it to you like it's an investment, but they don't even view it as an asset. That should tell you something, right? And I know that in the United States, people who have $1 million to $5 million in invested assets separate from the equity in their own home, it's like 27 million people out of 355 million, right? Like, it is a super small segment of the population. So the probability that somebody who is making, because somebody who's doing more than you will never do that, ever.
No one punches down.
No. And the probability that one of those people has those types of assets is like infinitesimally small.
Yeah. I mean, there's not many people on the face of the planet that have bought or sold as much as I have in their own portfolio, right? Like, right. I mean, in general, statistically, I know this to be true, but it's still, it's still hard because we are human, right? And like, they're like, don't read the comments. And immediately the first thing I do is read all of the comments, and I'm like calling my sister in a rage, and she's like mad. And I'm like, why am I doing this? Like,
what am I doing? I'm getting emotional about this. There's no reason to get emotional. Yeah. And what I've learned is a few things. I'll tell you a story and then I'll share with you what I learned. So I was getting ready to do a talk, and I was dressed up like last Halloween as like Travis Kelce, and my wife was dressed up like Taylor Swift. So I had these glasses.
I love it. I'm here for that.
Yeah. And I had these glasses on, like big, like, obnoxious, like, sunglasses. And I'm getting ready to talk, and I'm like, oh, I still have my sunglasses on. I should take them off. And then immediately I was like, nope, because people won't be able to resist talking shit. So I left them on, and that video went viral. And of course, in the comments, 50% of them, who wears glasses inside? You're an idiot. Da, 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 right? Like, it just exploded.
Like, thank you.
Yeah, and when I respond back, I'm like, they're like, who wears glasses inside? I'm like, it got you to comment though. Thanks. You know what I mean? Like, and then
thank you for the free marketing.
Exactly. And then what I've also learned is that if you can get half the population to hate your guts, you could become president of the United States.
That's definitely true. That is one. So it's funny you say that because a lot of times I'll have people on my videos go, this is the dumbest video I've ever seen. And so now I respond, I'm like, you should follow me then, because if this is the dumbest, surely my other videos are better than this one. They don't like it that much.
No, it's like, yeah, I hope I get better. Like, keep checking them out.
I'm like, if this is the dumbest, then everything else I have is better than this. So bar's low. Come on in. Well,
and I think what you touched on is super interesting because you're somebody who is super successful from a financial perspective. You've done some, like, you know, again, like world-class things in institutional grade assets, which is not easy to do. And even you, when it comes to media, there's like a little, and just like we were saying for that guy, it was mental for him. It's also mental for, like, it's no different. So to go back where people think like, oh, Veena's different. She has like all this money. She has all these units and like, she never worries. No, like the same exact thing happened. She called her sister. They were like, oh my God, I can't, but like, it's the same.
Like the amount of time I spent on that probably cost like tens of thousands of dollars. When, like, now it's like old news. I've adjusted. It was just like my very first time and it was new territory for me. And it's funny now because like all my friends are like, yeah, this just happens. Like, it is what it is.
And what's super interesting, I don't know if this has been true for you, but for me now I want it to happen. Now, when I drop videos, I'm like, oh yeah, like I can tell just by the title or whatever we say, oh yeah, people are going to be able to resist like commenting on this or talking about this. You know what I mean?
I think I'm like generally not a polarizing person, and the things I'm polarizing on are probably like pretty weirdly specific. So, you know, just an example of a recent debate that has come up on my social media is, and I'll ask you what you think of this too, actually.
Yeah. Okay.
It's not real estate related, so just buckle up.
Yeah.
Have you ever had a banana runt?
A banana what?
Runt. Do you know like runts, the candy runts?
Oh, I think I know what they are. Yeah.
Okay. The banana ones are like the best ones.
Okay.
And people vehemently disagree with, including my securities attorney, which is actually how this came up. He's like, you're disgusting. You would eat the banana runts. And I'm like, I only want to eat the banana runts. What do you mean? Right. And so like, I do a lot of, on my Instagram, I like to put like a lot of dad jokes in my stories. Like it's my thing because I appreciate them. And this is how I live my life. And I'm kind of quirky, but like this was a whole entire debate that happened on my Instagram. So I'm very polarizing about weird things, but like, I just talk about the fundamentals of real estate and investing mostly, but
it's interesting though, because I'm sorry if I interrupt you. Like I would propose that some of the stuff that you talk about like, hey, this is not taught in schools, or like, hey, I go to Paris and I spend them, like, I'm aware, like if you talk about that open, like people will, there'll be a lot of pushback. Like roast. And it's almost as though like, what I'm aware of is like the purpose isn't getting people to like you. It's just getting them to know you.
Engage. Yeah. And I know that there's like the school of thought that like all attention is good attention. I don't know if I'm there yet.
You're working on it.
Yeah. I feel like I'm still a baby in this space and just now realizing the power of like personal brand and the power of creating an intentional brand. Cause if you ask people in a room, like whenever I speak on stage, I'm like, how many of you guys have a personal brand? I'm like 50%, 30% of the room will raise their hand. And I'm like, okay, well, you're wrong. Because all of you have a personal brand. It's just the ones that raise their hand are aware of it and are maybe being intentional about it. But everyone has a personal brand. It doesn't matter who you are.
Yeah. And I think the majority of people who raise their hand, like where I would push back on them, is like they're saying that they do, but probably like 1% of them actually do. Right? Yeah. Because when I look at people's profiles and the majority of people are doing social, which is like, here I am, here's what I'm doing, here's what I'm eating. And it's no longer on the social graph, it's on the interest graph. What they need to be doing is media. And all of those people who do social typically have very little following because it's not interesting. Like your mom's watching that. Nobody else is watching that.
It's funny. That's who watched my Instagram for like the longest time until a year ago. It was like my mom and my sister and then like two random people.
Because you started to do media, which is valuable information in an entertaining way.
Yeah. I started being very intentional about how I was using it and what I was using. And I'm also very intentional about how I interact on social media. So like a lot of people are really surprised to find out that like on Instagram, I answer my own messages, unless you're spamming me, which I ignore. Or if you are reaching out to me with like, those people are like, oh, I can edit your content. I ignore those. But anybody that reaches out to me like personally, I respond to all of them.
I do too. I think it's really important because it's really about building like a community. And what I'm aware of is like you've done that. So tell us a little bit about, because it's this evolution, right? So you start in like corporate real estate, working for large, huge institutions. And then you're like, okay, I wrote this huge tax check. Like, I don't want to do this anymore. And your mom is like, yo, you need to like do this yourself. And you're like, okay. Then you started to do that. And now what's happened is with attention, it's allowed you to not only probably raise money in a way that you weren't able to before, but it also allows you to create a community and offer like a program of some sort. So tell us a little bit about how that evolved and what that program is.
Well, so it's called Multiply. It's a community. And I always tell people this, right? Like the biggest mistake I've made over my 12 years of being in business for myself is I thought that what was behind like these paywalls and these like paid mentorships, paid communities, paid events, VIP tickets, all of that. I thought it was a knowledge base of like, here's what NOI is, here's what an expense ratio is, here's what a T12 is. And I was like, I thought it was so smart. I was like, Veena, you can just Google all of that for free. And I was right. I did. And I could Google all of it for free. And now I'm in those rooms because I've earned my way into those rooms, right? Like I've done enough that is notable that people invite me into these rooms to speak and share my experience and my knowledge. And in doing that, I'm like, wow, I was like the biggest moron on the face of the planet, because what's actually behind those paywalls is not any of the technical information. You can Google that. Like people like you and I put this education out for free. You do not need to pay for that. What you pay for is a mindset. So being around people who can be like, hey, reconsider wanting to go viral and think about being more polarizing so you get more attention, right? Like you're saying that to me because we're talking to each other. No one else is going to say that to me at the grocery store, right? Mm-hmm. So it's the mindset. It's the proximity to people who are doing more than you. It's the people who can tell you like, hey, watch out for that pothole. And if you still run over it, I got you here. Let me connect you to my mechanic who can do this maybe at a discount, or is going to do it the best, or is going to be reliable, or turn around quickly, or whatever that is, right? Like, so now my Rolodex has completely opened up. My network is massive. And it's like a camaraderie that exists that you can't really put into words a lot of times. And Multiply is really focused on the community aspect. It's not so much the technical knowledge. Like, I mean, yeah, you're going to get that. But again, I don't think that's remarkable or special. It's there because you need a foundation. But it's really like the people that you can do deals with. So like I did masterclass for the first time in October of 23. And I didn't even know this until a couple of months ago, but like one of the people that was there ended up doing a deal with two other people there. They bought 55 units just from being in that room.
That's awesome.
And yeah, another person that was there, he now owns 700 doors from October to now.
Wow.
700 doors. So it's like, that's the power of those rooms, like being in those right rooms and being around the right people and then leveraging them can be so powerful to changing the entire trajectory of where you're going.
Yeah. And I think that knowledge is like actually the real currency.
100%.
And I want to do like everything in my power to get access to it. And I'm sure people look at you and they're like, just like they look at Pace or even like me, and like it goes through stages. The first is they laugh at you. Then they call you crazy. Then they call you a crook. You must be stealing. But then what they do is they call you for advice. That's the progression. You know what I mean? Because people could be like, whatever that group is, however much it is, they're like, oh man, that's super expensive. I'm like, well, let's think about this for a second. You were willing to pay $40,000 to $50,000 to go to college to get a piece of paper that when you got out, you made $50,000. Like, make that make sense.
Right. And okay, I'm Indian, so I have to say I'm still like a fan of college, right? Like I can't just totally turn on my ancestors that came before me, right? I'm a fan of college for most people. And the reason why is because I think education in any form, whether it's college or not, right, is the great equalizer. When you have knowledge and when you have education, you can do more and you can break cycles of poverty. And a lot of times college is the first stepping stone to do that. Now, as I say that, don't tell my husband this, but like, I care a whole lot less if my kids go to college because I just don't think it's as worth it as it was like in our parents' generation, even our generation.
I agree.
So I'm like, you could go to college or you could start a business instead. And like, it's like, different now.
When I say that in rooms of parents, like everybody gets like super uncomfortable. And what I'm aware of is that the ROI is not what it was before. And because of basically like debt, otherwise people couldn't afford it, it's allowed them to continue to raise the price that it's no longer associated with the value that comes with it. Like they're no longer their whole thing is like they would be the gatekeepers to jobs, but they're no longer for jobs. And when you think about it, like I used to have to, I'm 43. So like I used to have to buy a whole CD if I wanted to like one song.
Yeah, listen to a song. Yeah.
Well, and then what happened is like, Napster and like all this other stuff comes along and Apple, and then I don't have to do that anymore. I can buy the single. Well, why is it that I have to buy the whole package at college? Why do I have to do all of these other stuff when I don't even I don't need it or want it?
Yeah, I remember. So my degree was in finance, and I remember I used to take like earth sciences.
Yeah.
I can't tell you even one instance where I've used earth science.
Yeah.
In real life.
I know. And the problem I feel is that the actual skills that have tangible value, to me, one would be sales. You're always going to have to sell ideas. 2 is understanding media, because that has now we actually have now permissionless leverage. Like I used to need to get permission to go on the radio. I don't need permission to do YouTube anymore. I used to need permission to go on TV. I don't need that anymore. I could just go on Reels and TikTok. So, but people don't understand that, and they need to. I don't care if you're a doctor, an accountant, it's like carpenter. I don't care, a syndicator. Like what I find unbelievable is I've watched Grant Cardone. He dropped 1,000 YouTube videos in 1 year. He raises $500 million a year with no banks. That is like all through media. That is completely unbelievable. He's essentially become his own bank with a limitless supply of money to buy institutional grade real estate. Like unbelievable. And that is not something that kids are learning. They're learning like trigonometry. It's like, why? Like, if you're not going to be an engineer, like, why are you doing that? Like, I don't.
Yeah. You don't need to really know that much about parallelograms. Like,
right.
Learning for the sake of learning because it's interesting. Yes, I'm on board with that curiosity, but I don't need to pay $250,000 for my kids to learn these things. My husband's a physician though. So he's very much school. He was the valedictorian. And I need someone who's way smarter than me so that my kids have a fighting chance. Right. So I married him but he's don't tell our kids that they don't need to go to college. I was I'm not going to tell them that, but I also I'm not going to be
I'm not going to push.
Yeah, my parents were do you want to be a doctor or an engineer? Mm-hmm. And I was I want to do finance. And they're we will have an intervention. That. Those were the 2 options on the table. I was the black sheep of the family going into finance. But thankfully, my mom is an entrepreneur and she understood this. And she knew it was kind of in me. And she was all right, you have to get a real degree. Go be great. So here I am.
Yeah. And I think that it's okay. I think I need an accurate assessment of reality in order to produce a good outcome. So not see it the way I would like it to be, or there's nostalgia. So if a lot of my identity is wrapped up in education, it's a lot of my identity was wrapped up into being the guy that sold all the homes. And it took me a full year to let go of that so I could evolve, do something else. So if a lot of my identity is wrapped up in education, it's very difficult for me to let go of that, even if reality is showing me that it doesn't make sense at the degree that it used to. Now, if you're going to be a doctor, an accountant, or something like a professional that needs a yes, but like something like 60% go for like liberal. Like, what are you doing?
Yeah. Don't do that. Yeah. Like I don't want my kids to go to school if they're not going to go to school for like a professional or a technical degree. And also, there's something to be said about the experience of college. Like college was the best 4 years of my life. It was so much fun. You get to be like a baby adult, right? Like you have the freedom of an adult without the responsibility of being a full-blown adult. So it was great. But I just think the value proposition is very different today than it was when I was 7, so almost 20 years ago.
And I think that like the vast majority of the cost is actually lifestyle. And it's not a realistic expectation because they are not able to afford the living, the car, the stipend. So what you're actually doing, truthfully, in my opinion, and for everybody who's listening, I mean this with love, you're going to create adult children who come to you to ask you for money to fund their lifestyle because they can't do it on their own.
That's funny you say that because so I have 4.5-year-old twin daughters. And one of the things that like I work really hard fighting against is like, I don't want them to be entitled to anything, right? Like, so my husband and I do this thing where we're always like, oh no, that's not your bed because you don't have any money. That's mommy and daddy's bed, but we love you and you can borrow it for tonight. And like, we do this with everything, like their car seats, they're not their car seats. It's not their diapers. It's not their clothes. Like their toys are not theirs. Like literally nothing is theirs. Because they haven't earned it. They don't have any money. But I really want to make sure that we're not creating a generation, or at least our children are not in this generation of entitlement to things.
Well, and it's a challenge because like, what is the saying? Like strong women create good times create weak women, and weak women create bad times. So the challenge is once you have resources to not let your kids become shitheads. So how do you do that? Well, like, to your point, one of the things I did when Sebastian first wanted any kind of money, he wanted to buy Pokemon cards. So I was like, all right, dude, well, what could you do for me that would add value that I would give you money? He's like, well, you're my dad. I'm like, yeah, but like, that's not the way it works. The way it works in life is you have to add value to another woman. So he's like, well, could I like clean your office? I'm like, yeah. And he's like, how much? I was like, how much are you going to charge? He's like, well, $2. I'm like, that's a little light. Let's do like 10. So he's like,
that's where your kid comes into play because you're being a little bit.
And it's all big. He's like, whoa, $10. I'm like, okay, cool. And what I did is I came up with a scope of work. I typed it out.
Yeah. Contract. Yep.
And I was like, hey, what is the name of your company? Right. And then here's Aaron Novello, PA. Here's my company. And what we're going to agree to is you're going to do the scope of work. I'm going to check it out. And once I deem that you've completed it, I'm going to give you money. Cool. He did the work. We both signed it. We did the work. And then it's time to pay him. So I'm like, okay, cool. And I got the $10 in front of me and I give him the 10 and I'm like, all right, you got to give me 3 back. And he's like, what? I'm like, yeah, that's for taxes. He's like, huh? I'm like, yeah, dude, like you don't get to keep all the money that you earn, right? He's like, oh, so like these little things, or when I do syndications, like I've brought him and Liliana to the properties because some of them are in this geographic location. So I'll like, pose as a tenant and walk around and I'll just talk to them. I'll be like, hey, just so you know, like mommy, daddy, you're going to, like a tiny sliver of this enormous complex we own. And what's going to happen is all of these people are going to go to work for 40, 50 hours a week. They're going to pay their rent. And with the money that's left over, we're going to get a tiny amount. And they're like, whoa, really? I'm like, yes. Because I want them to see, or I would ask them like when we go out places, because I think, as a kid, we're just like, la, 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 like we don't even like realize what's going on. And we'll go into like a shopping center and I'll be like, hey, what do those people sell? And Liliana will be like, yoga. I'm like, yep. What do those people sell? And they're like, groceries. I'm like, what does that people sell? They're like, pizza. I want her to see everybody selling something. And I also want her to see that. And then what I tell her is, do you know what all of those people do with some of that money that they get? She's like, what? I'm like, they pay the person that owns this building rent. She's like, oh my God, really? I'm like, yeah.
It's like the light bulb. How old are they?
Liliana's 10 and Sebastian's 13.
Okay. All right. So they're a little bit ahead of my kids. So we did something really similar with my girls. So they wanted to have a lemonade stand because they read the Pinkalicious and the lemonade stand. So they wanted to have a lemonade stand and said, okay, great. Let's go to the store and get supplies. I'm like, okay, what do we need? And they're like, we need lemonade and cups and marker to write a sign. And I'm like, okay, great. So we get to like the front. They're 3, so they're little. Yeah. And I'm like, okay, well, how are you going to pay for it? And they're like, with money. I was like, great. Do you have money? And they're like, no. And I was like, well, we need money to pay for this. And they're like, okay, Mama, can you give us money? I was like, are you asking me to invest? And they're like, yeah, will you give us money? And I said, sure. How much money do you need? And they go, $25. It ended up being like $26, whatever. And I was like, okay, I'll loan you the $25, but how much are you going to pay me back? And they're like, 5 monies. So I was like, okay, I'm going to loan you 25. You're going to pay me back $30. And they go, yes. I'm like, all right. So I pay for it, and I can see the people at Walmart, like
what are you doing?
Yeah. Psychopath doing with their 3-year-old toddlers. And I'm like, all right, we're going to do this. So we come home, we make the sign, and I did the same thing. I made them write a contract, and they couldn't write. So I wrote the contract, but they signed it. And I was like, okay, so listen, the first $30 has to come back to Mama. And then anything after that you can keep, and you can go buy candy or toys or whatever you want. Or we can take that money and we can invest it, and Mama will show you how to do it. So they were like, okay. So they had this lemonade stand, and all 4 of their grandparents live in the neighborhood. So I don't want to say there was like price gouging or unfair pricing practices happening, but I will say that certain glasses of lemonade went for like $7 a glass instead of $1. Yeah. But, they wanted to set the price at $5 a glass. And I was like, okay, we can set it. But, supply and demand, people probably aren't going to pay that for this, but we can try it and see. And if no one buys it, we can start reducing pricing. But we know, like, we have to make at least $1 to be profitable. I'm like talking to them. They're looking at me like I have 2 heads because they have no idea what I'm saying. But the point isn't that. The point is that we start having these conversations very early in our households, right? Like we start teaching them these concepts very early on. Like right now, if you ask my daughter, hey, how do you make money? She'll say, oh, you put the money in the bank, and then the bank is going to give you more money for your money. And that's called interest. And, she's 4, but she understands this like generalized concept. And as they get older, we'll start honing in a little bit more and being a little bit more practical with the applications. But you have to kind of meet them where they are, but it doesn't mean you shouldn't talk about it yet.
Yeah, and I think that what is really cool, and I don't know if you guys, I think there's a way to do it, and you would know better than me, where you can have, so from a tax perspective, like I can pay my kids because they're involved, and like they'll be in posts, they were at our event, sign people in, all that. I can pay them up to a certain amount. The government will tell you how much. But then what I can do is I can take that money, and there's a way to invest it in a syndication or in a multifamily like thing for them. And then what happens is they get distributions. And what you could say to them is like, look, you spend that money. You can do whatever you want with it. I don't care. You want to buy candy, you want to buy Pokemon, like I don't care what you do with it. It's yours to do whatever you want.
Yeah. So that's what you could put it into. The real hack is putting it into a Roth. Right. And then taking the Roth and making it like a self-directed vehicle and then directing it into an investment. My kids recently, all the money that they get or have, like they get money for their birthday from like their grandparents or uncles or aunts or whatever. Or anytime I like sell their stroller and I get like $100 for it, I put it into their investment portfolio. So they have checking accounts. We go to the bank, they fill out their deposit slips, they deposit. Even if it's like $3, I want them to get used to handling money, touching money, talking about money, being around money, because I want to take away like the mystery of money from them. And so we do that. They have their checking account. And then every month, their checking account, I auto withdraw everything and dump it into an investment portfolio for them. So recently we've been doing like a lot of Mickey Mouse and Disney stuff. So we bought Disney stock. And so now I'm like, look, now you own a piece of Disney, and they don't know this yet, but we're taking them to Disney this year for the first time. So when we get there, I'm going to be like, look, you own a piece of this, and Mickey Mouse now works for you. Actually, he doesn't work for just Disney, but he works for you because you're a shareholder now. And so like, just kind of explaining to them these small concepts, and like, look, I don't have like millions of shares of Disney for them or anything, but we bought 1 share with the money that they had gotten from birthday gifts and whatever items got sold. So I think it's a good way to start the conversations around it.
I agree. And then the challenges too is like when you have resources, it's like kids don't spend a lot of money, parents do. And if I create a lifestyle for them where they're used to like the finer things in life without having the capacity to earn the money that's required for them, that's where you set up a dynamic where they're constantly going to come back to you and ask you for it, which is not
100%. No.
Yeah,
no,
yeah, yeah.
I want them to be independent, productive members of society.
Exactly. I heard Warren Buffett, he said one time, it was cool when he created the pledge, the wealth pledge.
Yeah.
Sat in front of like some of the richest people on the planet. And he's like, yeah, like, I think everybody in this room like would say like welfare is not a good thing. And essentially what wealthy people do is they create welfare for their kids. And then he was like, now that I've insulted everybody in the room, let's talk about like the pledge.
Well, what are we going to do to solve it?
Yeah. So I think that obviously it's a very kind of good problem to have, but it's something that you have to be thoughtful about. I've like thoroughly enjoyed our conversation. I could talk to you for probably like 5-6 hours, I very much so see in the future, perhaps some sort of like collaboration. We'll definitely invite you to come talk at one of our events. I definitely like to find out more information about your syndications and stuff. So, or the investments that you have, because perhaps we could participate. And if people want to find you, Veena, what's the best place for them to go?
I'm on all the social media as Veena Jetti, VeenaJetti, or if you're interested in investments, you can go to Vive Funds, VIVEFUNDS.com, and we have our investor portal there. And then if you want to join Multify or look at joining Multify, you can find it on link in my bio on all platforms. Again, Instagram. I respond to my own messages there.
Love it. So if you guys like this episode, be sure to watch the next one. We already have another agent, Jose, so I appreciate you calling, but I got to go.
I'm not sure if you're open to this, Aaron. Most sellers typically take the time to interview a couple